Murray, good morning. Congratulations. Looked like a fairly solid set of numbers. You've got a 750 million buyback going through. You've got an adjusted net that looks like it's ahead. The operating line looks like it is ahead as well. Should I focus on those figures, or should I focus maybe on the idea that actually the gearing ratios are starting to tick higher? Should I be focusing on debt, or should I be focusing on earnings this morning?
Well, good morning, and thanks very much for having me. It's been a good quarter, as you said, a 10% beat on expectation, 7.8 billion of operating cash flow, and of course we've now announced 5 billion of divestments year to date announced. The operations themselves were running very well. In the downstream, we've had our highest refining availability in 25 years, and our customers' business had the best result in history. And then on the upstream, of course, we're growing volumes 2 to 3% per year, and we've had 6 major projects come online, 4 ahead of schedule, and of course the 12 exploration discoveries. So a very good quarter, 3 quarters into our 12-quarter plan, but we've got great momentum.
Okay, so the momentum is going well. Talk to me about the momentum when it comes to the divestment program, because that is where everybody is focusing their attention right now. The name that keeps coming up time and time again in the analyst notes that I've been reading is Castrol. What is happening with Castrol? When are we going to be seeing that disposal going through? And are you still convinced that's the right move?
Sure. So what we announced in February, 3 quarters ago, is that we'd divest 20 billion of divestments across a 3-year time period to 2027, and that would help lower our debt from about 26 billion at third quarter to 14 to 18 billion by 2027. We're strongly in action. We've now announced 5 billion, including the announcement in the U.S. And over the past couple days. And so we have confidence that we'll hit that 14 to 18 billion. Remember, our net debt is 26 billion in the quarter. That was despite paying down 1.2 billion of the hybrid and despite a higher tax bill in the quarter. Of the 5 billion of divestments, 3.5 billion is still yet to come to the balance sheet once they complete. So that, of course, will show progress as well. And then on Castrol's performing really well. 9 straight quarters now with a profit improvement. Quarter in and quarter out, and strong interest in Castrol, and we remain confident that we'll be able to transact on it.
Murray, why sell it? You've just outlined a case for a really solid business that has a low cost of capital, that generates really decent returns. If I'm an investor, I'm looking at this going, yeah, okay, so that's part of the disposal program, but it's a great business. So why are we thinking about disposing of it?
Yeah, it is a great business. As I said, 9 quarters in a row with earnings growth, and Michelle and Emma, who are leading the team, are doing a great job. But it's the least integrated of our businesses. We have a strategy to grow our upstream, to tightly focus our downstream on the most integrated businesses that support trading, and then to invest very carefully inside transition. And with Castrol, it is a great business, but it's the least integrated. We don't have base oil, and I think it'll be of more value to others than necessarily to us. So we continue on our process, and we remain confident. With that process.
Murray, it's Creedy in London. Let's pivot to a little bit more of the macro agenda. I'm curious on your take on these oil markets right now. We have new sanctions coming out of the United States on some of the major Russian players. We have an oversupply, and we have an OPEC plus cartel that continues to hike out output. Where do you think oil prices end up in 2026?
Yeah, I think it's very difficult to predict oil price. Probably the hardest thing in the world. What I will say, though, is as you look through, demand remains strong. We continue to see 1% demand growth in 25 and 26, so very strong demand growth. And from a non-OPEC part of the world, the non-OPEC plus, we see production peaking somewhere in February, March, April. From there, we expect it to flatten and decline as far as the eye can see. So really, price is going to be determined by 3 factors. What happens with OPEC plus? You saw the action they had on Sunday. What happens with these sanctions? They're pretty serious sanctions. And then what Chinese behavior is on storage. Those are the 3 things that will determine the price. For us, doesn't really matter. What we're focused on is running a solid business. Uptime's at 97% across the entire portfolio. We're driving costs out of the business, and we're repairing the balance sheet. So we focus on a low price environment, and any price upside will just benefit us.
Well, Murray, speaking of that low price environment, there's starting to be some speculation that the oil prices are headed to be in the low 50s. We've heard that for analysts on the show. We've heard that from some of your peers as well. And it's certainly been a conversation in Abu Dhabi where you are right now. Is that valid? If we're talking about some of the trade uncertainty, if we're talking about a growth slowdown, is that a plausible scenario, low 50s come 2026?
Well, I'll just go back to the basics. You have to look at supply and demand when you think about these things. And demand remains robust at 1% growth. In fact, we saw gasoline demand increase 5% across Europe so far this year. So demand growth is strong, and through cycle, that's what's so important. And then on the supply side, again, it really just depends on what happens with these three big macro factors that are very difficult to predict. So let's just watch and see what OPEC Plus does. Let's see how these serious sanctions impact supply, and let's see the Chinese behavior, and then we'll be able to determine what happens with price.
Good morning to you, Murray. So you've set out the three things that you think will then determine that price. Talk to me about the link between price and your balance sheet. You're clearly taking very seriously what you need to do around the balance sheet. Does that get harder with a lower oil price? Do you need to sell more assets with a lower oil price?
Well, you saw so far this year, or you saw in this quarter, that we were able to keep the balance sheet flat despite paying down the hybrid and despite a higher tax bill. As we look forward, there's $3.5 billion of proceeds from our announced $5 billion in divestments that haven't completed yet. Those will go to the balance sheet, so we'll have good momentum with those over time. We also have the divestment that we just talked about with the rest of the $20 billion program, including a potential transaction on Castrol. So we remain very comfortable that we'll hit our $14 to $18 billion target. It's a primary target for us, and we will adapt as we go along.
OK, can I ask you about Brazil finally, Murray? You last week provided an update on some of your offshore oil discovery activities there. How many barrels do you see there, and what does the drilling timeline look like? Because you previously talked about this as being a really significant discovery for BP.
It is significant. It's a 1,000-meter column of hydrocarbons. The first 100 meters are black oil. The next 900 meters above it are rich gas condensate. So it's a very good reservoir. We continue to take samples, and we'll evaluate those samples, including the sidewall, and that will enable us to be able to tell you what the volumes are in place, and that will come in due course. In the meantime, we've contracted a rig, and we've contracted the equipment for a flow test, and we look forward to moving into that phase of the development in the back end of 26 and into early 2027. We have a team stood up to look at an early production system and a full development scheme. This is the largest discovery we've had in 25 years, and we're really looking forward to progressing it.
Murray, thank you so much. Thank you for joining us. Really appreciate it. BP CEO Murray Auchincloss, thank you for your time.